Imagine waking up tomorrow and realizing that your life savings are worthless. The money in your bank account? It can't even buy a loaf of bread. Your paycheck? It's losing value by the hour. Prices at the grocery store double, then triple, then skyrocket beyond anything you've ever seen. And just when you think things can't get worse, the government prints even more money, making everything even more expensive. This isn't a hypothetical scenario. It's happened before. Many times. And right now? It could be happening again. Hyperinflation is one of the most dangerous and destructive economic events a country can experience. It has wiped out entire economies, erased the wealth of millions, and triggered revolutions and societal collapses. And the scariest part? It doesn't happen overnight, it builds slowly, until one day, everything spirals out of control. But how does hyperinflation start? What causes it? And more importantly, could it happen again in today's world? To understand the terrifying reality of hyperinflation, we need to look at history's worst financial disasters, and what they reveal about the future. What is hyperinflation, and why should you care? Inflation is a normal part of the economy. Prices go up over time, that's expected. But hyperinflation? That's something entirely different. It happens when a country's currency completely loses its value, so fast that prices rise by hundreds or even thousands of % in a short period of time. This means, upward trend food prices can double in a week. Upward trend your salary can't keep up, so even if you earn more, you're still getting poorer. Upward trend people rush to buy anything of value before their money becomes worthless. It's an economic nightmare, and once it begins, it's nearly impossible to stop. But here's the terrifying truth, it always starts the same way. Governments print too much money, thinking it will stimulate the economy. At first, everything seems fine. Then, inflation speeds up. Then, panic sets in. And before anyone can react, it's too late. Now we'll dive into some of the worst cases of hyperinflation in history, real-life economic disasters that wiped out entire nations. We've already seen how hyperinflation begins. It starts slowly. A little more money in the system, a little increase in prices. Then it speeds up. People notice their money doesn't go as far. They panic. They rush to spend their savings before it loses even more value. Then, the system collapses. Governments try to print their way out of the crisis, but every new bill they print makes the situation worse. And before long, their currency is nothing more than worthless paper. This isn't just a theory, it has happened before. Many times. And today, we're going to explore some of the worst cases of hyperinflation in history, real stories of entire nations being financially destroyed. If you think it could never happen again, these stories will change your mind. The German hyperinflation of 1923, when a wheelbarrow of cash couldn't buy bread. One of the most infamous cases of hyperinflation happened in Germany in the early 1920s. After World War I, Germany was forced to pay massive reparations to the victorious Allied powers. The country was already struggling financially, but instead of making tough decisions, the German government decided to print more money to pay its debts. At first, the effects were small. Then, inflation skyrocketed. Downward trend by mid-1923, prices were doubling every few days. Downward trend, a loaf of bread that cost 1 mark in 1919 cost over 200 billion marks by the end of 1923. Downward trend, workers were paid multiple times per day, because by the evening, their wages would be worth half as much. People needed wheelbarrows full of cash just to buy basic groceries. The situation became so absurd that it was cheaper to burn banknotes for heat than to buy firewood. And in the end, Germany's currency, the Reichsmark, collapsed completely. The only way out was to introduce a new currency, reset the financial system, and start over. This wasn't just an economic crisis. It paved the way for massive political instability, eventually leading to the rise of Adolf Hitler. But Germany's hyperinflation wasn't the last. Another country saw an even worse financial collapse, one that happened much more recently. Zimbabwe's nightmare. When money became worthless overnight. Germany's hyperinflation may be one of the most famous cases, but Zimbabwe's hyperinflation was even worse. It started in the early 2000s, when the Zimbabwean government made one crucial mistake. It printed massive amounts of money to cover its debts and fund government programs. Upward trend inflation skyrocketed, at one point reaching 89.7 sextillion% per month. Upward trend, a single egg cost billions of Zimbabwean dollars. Upward trend, the government issued banknotes worth $100 trillion, yet they couldn't even buy basic groceries. People stopped using Zimbabwean dollars altogether. They turned to foreign currencies, gold, and even bartering to survive. And just like in Germany, Zimbabwe's economy collapsed. Eventually, the country had no choice but to abandon its own currency and start using US dollars. But here's the scariest part: Zimbabwe isn't an isolated case. In fact, hyperinflation has happened in Argentina, Venezuela, Hungary, and dozens of other countries. Now we'll explore how hyperinflation is still happening today, and why some experts believe it could even hit developed economies like the US or Europe. We've already seen how hyperinflation has wiped out entire economies. Germany in the 1920s. Zimbabwe in the 2000s. Argentina, Venezuela, and Hungary, all victims of runaway money printing and economic collapse. But here's the terrifying question: could it happen again? Most people assume hyperinflation is a thing of the past, something that only happens in unstable, developing economies. But the truth is, the warning signs are already here. Rising inflation. Massive government spending. Record-breaking money printing. Are we heading toward another financial disaster? And more importantly, how can you protect yourself before it's too late? Let's take a look at the warning signs happening right now, and why some experts believe hyperinflation could hit developed economies like the US and Europe. The pandemic money printing boom. Are we following the same pattern? To understand why hyperinflation could happen again, we need to look at what's happened over the last few years. During the COVID-19 pandemic, governments around the world took extreme financial measures to prevent an economic collapse. Moneybag, they printed trillions of dollars. Moneybag, they flooded the system with cheap money. Moneybag, they kept interest rates near zero to encourage borrowing. At first, it seemed to work, businesses survived, stock markets boomed, and people kept spending. But there was one big problem: you can't create money out of thin air without consequences. Upward trend. By 2021 and 2022, inflation started rising. Upward trend, prices of food, gas, and housing skyrocketed. Upward trend, people's wages couldn't keep up. Governments said it was temporary. They claimed inflation would go back to normal, but it didn't. And as inflation soared, central banks were forced to react, raising interest rates to slow things down. But here's the catch: raising interest rates can trigger a recession. So now, we're caught between two dangers: high inflation or economic collapse. And this is exactly how past cases of hyperinflation started. Debt, devaluation, and the US dollar's risky future. For decades, the US dollar has been the most powerful currency in the world. It's used for global trade, oil purchases, and international finance. But what happens if the world loses trust in the dollar? Right now, the US is drowning in debt, over $34 trillion and rising. At some point, investors and foreign governments could lose confidence in the dollar's value. If that happens, Moneybag, the US could be forced to print more money to pay its debts, triggering even higher inflation. Moneybag, other countries might stop using the dollar, causing a major devaluation. Moneybag, everything imported into the US could become dramatically more expensive. And that's where the real danger begins. Because the moment people realize their currency is losing value, they rush to spend it before it becomes worthless. This is how hyperinflation explodes. And it's already happening in other parts of the world. Modern-day hyperinflation. The warning signs we can't ignore right now: multiple countries are experiencing extreme inflation. Downward trend. Argentina. Inflation over 200%, forcing people to abandon their own currency. Downward trend Venezuela. Over 1,000,000% inflation, leading to mass poverty. Downward trend Turkey. A collapsing currency and surging prices, making daily life unaffordable. People in these countries are desperately turning to gold, cryptocurrencies, and foreign currencies, anything to escape their collapsing economies. And history tells us this isn't just a local problem. Once confidence in a currency is lost, it spreads like wildfire. The question is, how far could it spread? And what would happen if a major economy, like the US, Europe, or China, fell into the same cycle? Now we'll reveal how you can protect yourself from hyperinflation, and what assets hold their value even when money becomes worthless. Because if history has taught us anything, it's that those who prepare survive, and those who don't lose everything. We've seen how hyperinflation has destroyed economies before. We've explored how governments around the world are repeating the same mistakes today, printing money, drowning in debt, and risking a financial collapse. Now comes the most important question of all: what can you do to protect yourself? Because when hyperinflation hits, it's already too late to react. If you wait until prices start doubling every week, until your money loses value overnight, until banks limit how much cash you can withdraw, you're already trapped. But history shows us that some people always survive hyperinflation. While millions lose everything, those who prepare in advance not only survive, they thrive. So today, we're breaking down the smartest ways to protect your wealth, escape the dangers of hyperinflation, and ensure your financial future is secure, no matter what happens to the economy. Why cash is the worst place to store wealth in hyperinflation. In a stable economy, people feel safe keeping their savings in cash or bank accounts. But when hyperinflation strikes, cash becomes worthless. Think about it. If inflation is rising at 50% per month, your money loses half its value every few weeks. If prices double every month, your savings disappear in real time. This is why, during hyperinflation, people rush to exchange their cash for anything that holds value, before it's too late. So what should you do? Simple. Don't store your wealth in cash. Store it in assets that keep their value even when money collapses. Here's what history tells us are the best ways to protect yourself. The best assets to own during hyperinflation. Pushpin 1. Gold and silver. The oldest store of value for thousands of years, gold and silver have been used as real money. When paper currencies fail, gold and silver still hold value. During past hyperinflation crises, checkmark people traded gold for food, shelter, and protection. Checkmark governments that printed worthless money still accepted gold and silver as payment. Checkmark when cash became useless, gold remained valuable across the world. This is why central banks still store gold reserves today. They know that when all else fails, gold remains. So if you want to protect your wealth, owning gold or silver is one of the safest options. Pushpin 2. Real estate. Land always has value during hyperinflation, currencies collapse, but real assets remain. Land, houses, and rental properties still hold real value, even when money loses its worth. Upward trend. Why real estate is powerful during hyperinflation. Checkmark. It generates income. If you rent out a property, your income rises with inflation. Checkmark. It's a physical asset. Unlike cash, it can't disappear overnight. Checkmark. It increases in value over time. As currencies weaken, real estate prices usually rise. Even during some of the worst hyperinflation periods, people who owned land or properties managed to survive, while those with cash were wiped out. Pushpin 3. Foreign currencies. Escaping a collapsing economy. When a country's currency crashes, people rush to hold more stable foreign currencies. During Zimbabwe's hyperinflation, people stopped using Zimbabwean dollars and started using US dollars and South African rand. In Argentina today, people hoard US dollars because they know their own currency is collapsing. Holding stronger foreign currencies can be a smart way to protect some of your money from extreme inflation. But there's a catch: if a crisis spreads worldwide, even foreign currencies can lose value. That's why it's best to combine different strategies instead of relying on just one. Pushpin 4. Cryptocurrencies, digital gold or a risky gamble? In recent years, many people have turned to Bitcoin and other cryptocurrencies as a hedge against inflation. Why? Checkmark: Bitcoin has a fixed supply, no government can print more. Checkmark: it's decentralized, governments can't easily control it. Checkmark: it can be stored digitally, making it easy to move across borders. During the hyperinflation crisis in Venezuela, Bitcoin became one of the only ways for people to preserve wealth and escape government restrictions. But cryptocurrencies are still risky, they can be volatile and unpredictable. For some, they're a smart hedge against inflation. For others, they're a gamble. Should you own crypto? That depends on your risk tolerance, but history shows that people will always seek alternatives when traditional money fails. How to prepare before it's too late if hyperinflation happens. The worst mistake you can make is waiting until disaster strikes. By the time inflation spirals out of control, it's already too late to protect yourself. Here's what you can do right now to be prepared. Checkmark: diversify your wealth. Don't keep everything in one currency or one type of asset. Checkmark: invest in hard assets. Gold, real estate, and productive investments hold value better than cash. Checkmark: reduce debt that will rise with inflation. If interest rates spike, loans can become a financial disaster. Checkmark: build emergency supplies. Food, essentials, and barterable goods can be crucial in extreme cases. Checkmark: stay aware of economic trends. If you see inflation rising quickly, act before the crisis escalates. Because those who recognize the signs early are the ones who survive financial disasters. And those who wait? They lose everything. Final thought: will we see hyperinflation again? Right now, inflation is rising in multiple countries. Governments are printing record amounts of money. Debt is piling up, and people are starting to question the value of their own currencies. Could hyperinflation happen again? No one knows for sure. But one thing is certain: those who prepare will always have the advantage. Because history has shown us that money can become worthless overnight, but those who own real assets, think ahead, and act early are the ones who survive. The question is, will you be ready? If you found this video helpful, hit like and subscribe for more financial insights. Do you think hyperinflation could happen again? Let's discuss in the comments. Turn on notifications so you never miss an update on global financial trends.